Welcome to the Nomad Hedge, and today we're going to review the markets. And so we got the tariff announcement, meaning that we got a 90-day pause here, and that's going to reduce the tariffs from some 145% back to 30%, and China has basically slashed their tariffs against the US all the way down to 10%, but it's just temporarily pause or a truce for 90 days before we see further negotiations. So what does this mean for the market? So right now we do have the S&P 500 or the SPX. This is the index level. So we close here at around 5,348. And basically we are above all the key moving averages here. There's nothing where the index is trading above or below some certain key levels. It's just trading above all key levels here. So we can see here the 233 was breached already here back on May 7th last week. So a lot of people were looking at the 200-day moving average. I was saying back then that we're already above all key MA. So this means that there is potential for pullback in the days ahead. Now, specifically today is Tuesday, so we're going to look into some economic data that's coming up that could obviously move markets. And we do expect some profit taking to take hold here. This move here basically has been very rampant. A lot of people just foaming in here, and because people don't know what to do with their money basically. So we do have the core inflation rate month over month and the core inflation rate year over year. We also have the regular inflation rate. All these releases are coming on Tuesday. So that could be a time for the markets to maybe pause a little bit, maybe see some profit taking, and then just trying to establish some support. So we are above all the key moving averages here. So is it possible that this move could be, that we could correct this entire move here? It is obviously possible. From an Elliott wave perspective, we could look at this as a potential corrective move, right? So if this is, let's just say this is an A, B, C, now we're above the 100% extension, but sometimes markets could obviously go beyond the 100% extension. But in this case, either this could be an ABC, or it could be something along the line of an impulse, right? So if we are ending the near end of this impulse, then we could see a correction basically of this entire up move here. And once we establish support, that's when we can start adding into new positions. Now, the way I look at this market is that there's a possibility, okay, there's a possibility, we've mentioned this before, that this could be a bear market rally. Okay, so that means that this move here has only been corrective. And with that said, we have to look at what happened here, these levels here. All right, so one can make the case that this is an A move. All right, and then we have a B, and then you have a C. Obviously in a lower degree. So this move here, let me use this one instead. So this move here could be part of a larger wave B. Okay, so what comes after wave B? You have wave C. Or what we're looking for is potentially that this could be part of a leading diagonal of some sort, and that we're just going to get a normal pullback here, maybe to the 0.6 Fibonacci retracement, and then we're going to see markets just power higher. So basically, this week is going to determine where this market is going. Are we going to start falling below some key levels here? Okay, so that's what we're watching. Watch these key levels here. We got the 55 EMA, we got the 233 EMA, we got the 21 EMA. So once we start breaking below these key levels here, then we have to be very cautious. At the same time, we do have an open gap here. So that could be an area of interest where the market wants to fill and then resume higher from there. Or what typically happens is you do fill the gap, you're correcting, and then you're doing just an impulse towards the downside. We believe eventually that this market is going to go higher. Okay, it's just that where are we going to find support? That's the question so far. So was this the ultimate support? and that we're ready to fire up higher, because you have to take into consideration why we found support here. And we were just basically testing the former highs here of the former bull market we had here back in 2022, 2021. So that was a nicely retest here. However, we have to consider the possibility of a potential another corrective move. And what we did last time was that we retested the 233 EMA, and there's a possibility that we could retest this level again. And here's where the 100% extension aligning with that level now. So we're looking forward to, we've highlighted this in our previous video, a scenario of this or a scenario of this, something along the line of this. So either way, we're looking for a break of new highs here. Either way, it's just that is this the ultimate support level, or is this the ultimate support level? So that's what I want you to take from this video, is that now that the markets have rallied so much, this trade deal, okay, it could be a sell the news event. We've seen this happening a lot of times, where market is trying to anticipate something, it rallies hard, and once the news confirms it, that's when you start rallying or selling off based on that news. Here's what I also want you to see here. On the monthly chart, okay, we have a huge candle wick here. Okay, this is a massive imbalance, and we're seeing this across the board. We're seeing this on the sector levels, on the indices levels, and this is rampant above, or I would say among many other indices across the world. So this could be a temporarily imbalance here. So we're looking for perhaps this level to be consumed and then move up higher. So that is why we're still open to the fact that we could still make new lows here, and that the markets could obviously sell off on that. So keep that in mind. So this is a very unusual large VIX here. I mean, we had one here back in 22, but it wasn't that extreme like this one. So this is a pretty huge extreme VIX here. I mean, this is just telling us that the algos, they were just early to just buy here, and they just push, and now we're just above the 8 EMA, right? So if you're staying above the 8 EMA, in our view, you're still in a bull market. So we had the retest here of the 55 EMA. We're looking at the monthly chart here, so keep that in mind. So is this just going to be a failed breakout, and then perhaps see new lows here? Or is this just going to be a perhaps retest here and then fire up higher? So I've not seen this before. I'm pretty sure you have not seen this before as well. But typically this is a huge imbalance that the market wants to resolve before moving higher. So either way, we believe that new highs are coming. Just be cautious and not try to chase the markets at these levels. We do have some very, very strong economic reports, and we also have Thursday coming up with the PPI, and you also have retail sales. And then on Friday, we're going to conclude with some housing data coming in for the US. So that's what I want you to take with this video, is that we are looking for a slight pullback here. And just one thing I want to mention here, take a look at Microsoft. Okay, so here's Microsoft. Now, Microsoft saw a lot of bidding here towards the upside. It left a huge open gap here. Okay, so we can see this gap here. It gapped up almost over 7%. Okay, now, do we think that this gap might be filled? I mean, it's a huge gap, and this is not a, just a small name. It's Microsoft after all. So, I mean, I would not be surprised if we saw this gap getting filled. And if we're getting that gap filled, that means the major indices might start to retract with it as well, because it's going to be a lot of selling pressure. And we also need to remember that there is a small gap here as well. So Microsoft, if Microsoft's going to drop just to fill this gap, we're looking at a 11.7% decline from here. And if it's going to fill the gap here, so that's going to put it almost in the bear market territory again. There are some major risks here. If you're in the camp that you don't believe that this gap is going to get filled, then yeah, I mean, we can stay bullish all we want, but we need to be cautious at these levels. So best case scenario, I would say just fill this gap here and then rally higher. If we're starting filling this gap as well, we need to look for perhaps new lows here coming in. So that was just something to give you some context here within this market. So that was it for today's video. If you haven't already, like and subscribe, and I'll keep you guys updated. You can follow me on X. I post daily there, so keep me updated with some market moving events and news. So I'll see you guys in the next video. Take care for now.